Hey, thanks for joining Kate and I for a chat. Now, Kate is a finance expert. She is a boss lady when it comes to all things money. So I'm glad she's sitting here with me. We're talking about tips for women when it comes to our super. Superannuation is not that super for women because apparently, according to stats, when we retire, we get maybe less than half or just over half than that of a man. Why is that?
Well, it's largely because of the pattern of our working lives.
Right.
So most women, we tend to get paid less. You've heard of the gender pay gap.
Yeah.
We have breaks in our careers.
To raise our families, to help our parents or whatever the situation is, yes.
We often return to work part-time.
Yeah.
We typically are not as engaged with investing in our superannuation
because we're too busy just trying to make everything happen.
Exactly.
So how can we get onto being more intentional about our superannuation and making super work for us?
Now, this is going to sound glib, but just get started.
Right.
So get in there, have a look at your existing superannuation and get familiar with what's on offer with your superannuation fund.
Right.
The research actually shows us that women will get interested with investing once they feel engaged. And so get started is really the starting place.
I guess it's so important to have this superannuation there for us as we get older. We want to have those, funds to tap into, I guess. And we're we're in an economy where we can't rely on the government to support us in those times. So a lot of women are ending up homeless or, just unable to provide for themselves. So how can we add more to our super now while we're working?
So you'll get super contributions from your employer, which is called super guarantee, and that is really, really important to make sure that you're actually receiving that. Secondly, you can top up your super. So you can actually use money that you've got in the bank that you may have, received from the sale of a property or that somebody's given to you as a birthday gift. You can put that into super as a contribution as well. But the other thing is to actually look at the way that the superannuation's invested within your fund.
And what are we looking for?
Good question. So the main thing for superannuation in particular is that it's a long-term investment. And so what that means is that we're not investing for the next 30 days or even the next 30 weeks. We're investing for the next 30 years. So we can handle in our superannuation quite a bit of investment in growth assets. And they're the ones that, as you know, they go on a bit of a roller coaster. Right. But if you've got a long-term horizon, then you can actually ride out those bumps because over the long term, those growth investments will actually give you a better return. But you've got to diversify well.
So diversify. How do we diversify well?
So the simplest way to diversify is to make sure that you've got a mix in your superannuation fund of different assets. And when I'm talking about assets, there's four main assets that we're worried about. It's shares, listed property, bonds or fixed interest, and cash. And so if you've got a mix of those investments in your superannuation, you've got a very, very good chance of being well diversified.
Right. Okay. Thank you so much, Kate. Now, look, Kate is got a wealth of information on our website, so do check it out, mumsathetable.com, and keep it locked right here for great information like this and more.